You're right on the money. Nailed it. This is a big, big issue for communication in the White House right now. Can you give us what you think they should do in the weeks and months to come?
Sure, John. Thanks for having me on. They have to translate things that they've achieved and that the public doesn't appreciate. Amazing job growth, very strong economy. Remember, even Bloomberg said 100% probability of recession in 2023. Instead, we've ended up with a 5% third quarter, a 3.3% fourth quarter. Remarkable. Stock markets, record high. And it's the only advanced economy that is investing in the drivers of tomorrow's growth. That is a long list of achievements. And yet, if you ask the person in the street, and Marie talked about the polls, they think that the administration has mishandled the economy. There's two reasons for that. One is inflation. You're absolutely right. People think in terms of price level. So for them, when you say we are winning the war over inflation, they think that that means prices will come down, not that the rate of price increases will come down. And the second thing is they haven't communicated in a manner that translates this to the everyday. So you need a lot more consistent communication, and you need it simplified so that the person in the street understands why not only are they better off than they've been before, but the prospects is that we have new growth engines coming in.
I'd also argue, Mohamed, you need the labour market to hold up for the rest of this year, to allow the scars of inflation to actually heal. Do you think the easing of financial conditions over the last few months, let's go from the end of October, Mohamed, do you think that's sufficient to delay any weakness in the labour market?
I don't, because a lot of this is like pushing on a string. Corporates will be able to refinance at lower rates, mortgages slightly better. But the reality is that there's structural issues. I mean, that is the big risk for the administration, is that the economy slows this year because some of the drivers of last year's growth are no longer there, including high savings. And secondly, inflation stops going down. You know, John, I've said we are in the sweetest spot of the inflation reduction right now. It's going to get tougher going forward. And we've already seen from Europe that it's not out of the question that not only does inflation stabilize, but once in a while you get the rate going up. And that would really impact perceptions.
The White House is so excited to lean into this, Mohamed, soft, very soft landing expectation. The timeline may be on their side, but when you look out to November, where are the vulnerabilities to that soft landing?
So the vulnerability, there's three of them. One is what the external world is imposing on the U.S. It is getting harder to grow in this global environment. We have disruptions of supply chains. We have cost pressures in the pipeline. We have delays in shipments. All that has a marginal impact. Two, the consumer is going to be under more pressure. You've talked about debt levels in the previous hour. Savings have come down. We no longer have the pandemic savings being utilized to the extent it was before. So there's a real risk that growth slows to the 1 to 1.5% level, with downside that we may slip into a negative quarter. And then thirdly, inflation. We need inflation to keep on going down. The market expects that it will do so in a much more orderly way than I think will materialize, unfortunately.